So this trial balance in front of you is unadjusted trial balance, and we are about to look into what kind of adjustments you have to make into uh, this unadjusted trial balance. So probable adjustments could be, okay, first one, there is a chance that you received 200 out of 300 receivables. So this is one probable adjustment. Second is that account payable is overstated by, for example, 2000. Third will be, for example, dividends paid are wrongly reported as they are actually 300, not 1000. Fourth probable transaction is rent expense is 400, not 500. Fifth type of adjustment could be from supplies expense. The supplies expense is understated by 200. And the last probable adjustment could be that interest expense is 1000, not 500. Uh, if we have these transactions, we can make certain adjustments to these unadjusted balances. Finally, mute your mic. Okay. So first one is receive 200 out of 300 receivables. So when you receive, you have journal entry of what? Cash, debit, and you received how much? 200, and your account receivables are bound to decrease or when we are to decrease the assets, so it should be credited. So this is your debit side, this is your credit side, this is your account. So this is the first adjustment entry which you have done. So you're required to do the journal entries for these adjustments which are required of you. So for number one, we have done the adjustment and adjusting entry that we received 200 out of 300. Then account payable is overstated by 2000. So we have jumped to the second transaction, which states that account payable is overstated by 2000. That also means that this 49,000 shown in accounts payable is overstated by 2000. Means it should have been 47,000, but in actual it is showing that it's 49,000. So what could be the entry? So we are basically trying to decrease this account payable by 2000. So when you decrease payables, either you have to pay or you have to return some goods, like means most of the time this payable is for from the inventory, credit purchase of the inventory. So you can return those goods worth 2000. Since the information provided to us does not describe any mode, so best way is to do adjustment from payables, meaning you have to realize that you might have paid these 2000 but you haven't recorded it. So since you had not recorded it at that time, so at the closing time you can record it to avoid a common mistake. So that is why will be recording it as account payable to cash, assuming that we have paid it. That's why it was overstated. But to get it to 47,000, we need to pay 2,000. So this is one probable way of doing it. If you had certain information regarding inventory or uh, stating us that this is overstated due to goods return, so then we would have recorded it as account payable debit 2000, and we would be decreasing our inventory, right, by 2000. So only then we will not be recording it through cash if the inventory has been discussed in this information. So this is the possible other way of doing this transaction, but over here we'll be doing it uh, in the way that we have paid it. So that is our probable adjustment one. Okay, so third transaction, it states that dividends paid are wrongly reported as they are actually 1500, not 1000. So dividend records is showing us that it was 1500 and it wasn't 1000. So dividends are normally expense. So we record it as dividends expense, or since he has written it as just dividends and he has not reported it as an expense, so we'll be using the similar nomenclature. So to get it to 1500, we need to increase it by 500. And since most of the time dividends are paid from cash, so we'll be recording 500 credit as cash, right? So this will be your probable adjustment for and adjustment entry number three. So the fourth states that rent expense is 400, not 500. So now you have to decrease this rent expense. So this means mistakenly you have recorded it as on the higher side. So when you would have actually recorded it, you would have recorded it as rent expense debit 500, and obviously you would have paid it to cash. So 500. So we are now reversing this entry by how much amount? Obviously by 100 only, because it states that it is 400, not 500. So we have to increase 100 in cash, and our rent expense needs to decrease by 100. So it becomes 400, right? So this is your transaction number 4. Moving on to transaction number 5, which states office supplies expense is overstated by 200. So this is also overstated. So it needs to come down. So to get it to 200, we'll do the similar which we did in the previous transaction. So cash will increase by 200, and your office supplies expense will decrease by 200, right? Since it was overstated, so we need to decrease it by 200. Sorry, it wasn't overstated, it was understated. We did it wrongly. So we need to change this. Since it is understated, not overstated. So understated means it should have been 700. Instead, it's showing 500 as a balance. So you have to incur more office supplies expense. How much? 200. And obviously, this expense will be paid by cash 200. So if it would have been overstated, so previous situation applies, but it is actually understated, so it needs to go up by 200. Then we have interest expense is 1000, not 500, so it has to go up. Interest expense is go up by 500, because 500 is already there, we need to increase it by 500. Now interest expenses when incurred are not normally paid in cash. It has certain time period or delayed time payments option. So it's better to write them as payables. So we could easily have written cash here, but we are not writing cash here. So it is interest payable on the credit side. So it is only due to its general behavior, because office supplies are normally purchased. You purchase paper, pen, pencil, things like these. So you pay by cash. You normally don't go for credit options, right? It's the similar in the similar way for the third transaction. It could have been dividends payable, but it is quite possible that you have paid it. Most of the time they are in cash, so uh, that is why we put it as cash. Otherwise, we could have written it as dividends payable as well. Same for office supplies, we could have written office supplies payable as well. But thing is, we needed certain more information to write them as payables. But for the interest, normal behavior is interest payable, not cash. That is why we have written interest payable. So this is all for these 6 transactions. Now look at the uh, journal entries, which is the first step of your information assessment and recording. First step of recording, and the second step is your T accounts. So you have to recalculate all the T accounts, especially for those heads which have been affected by these adjustments, such as cash, for example. So your starting cash was 32,800, and then you look at the cash elements which have affected your adjustments. For example, in number one, So this is from the unadjusted trial balance, right? So this 32,800 came from unadjusted trial balance. So I'm writing it as abbreviation UATB. But then this 200 is coming from adjustment number 1, right? And from adjustment number 2, you have cash of 2000 credited. So 2000 on the credit side, which is from the transaction number 2. We also have 500 going out in transaction number 3. We received cash of 100 in transaction number 4. We have paid 200 in 5 as well, so 200 credited in number 5. So what about number 6? We have wrote it as payable. So these all have affected your cash. So now the balance on the right side is balance carried forward, which is how much? Okay, 2700, and this is 33 1. So this should be 3300 and 3400, 30400. So now this is your first key account. Second key account is of account receivables. So the normal balance was 300, and now in from the first transaction you have, so this is from unadjusted trial balance, but this 200 is coming from the first transaction. So the net balance is basically 100, and this should be carried forward. So your account receivable has also been entertained. Now it's the turn of account payable. So the opening balance for account payable was 49,000, and it needs to go down by 2,000. So it is debited, and the balance carried forward for it should be 47,000. So this is completely done now. The next is you need to increase your dividends by 500. So dividends starting with 1,000, and then your this transaction number 3 is stating that this is for both of them, and this was from transaction number 2. So from transaction number 3, your dividends are going up by 500. So your balance carried forward is now 1500, right? So this transaction is also completely done. Now you have rent expense because cash is already done. Rent expense. It was initially 500. This is from UATB, but it needs to go down by 100 in transaction 4. So it is coming down by 100 and going to be 400. Then you have office supplies expense. So your office supply expenses have had a debit balance of 500 already. Am I right? Yeah. Okay, 500. So it had already 500 as a debit balance. Now you're about to increase it by 200. So this was your uh, unadjusted trial balance, and this was from your transaction number 5. So now your balance carried forward is 700. So your transaction number 4 is also done, 5 is also done. Now you have transaction number 6. So your interest expense needs to go up by 500. So your starting balance was 500. This is unadjusted trial balance. And now you have 500 as a debit from transaction number 6. And your balance carried forward is 1000. And you have lost the account to be made is of interest payable. So interest payable is now 500. This is from transaction 6, but do we had any? No, we didn't have any previous heads. So interest payable balance carried forward should be 500, right? So we have these key accounts. Now you have to make adjusted trial balance. Okay. So to avoid any confusions, I'm writing on this question alongside this question for debit and credit accounts. This account, this account changed, right? This account changed, which was cash. Its new balance is now 30400. So we will be writing 30400 as debit balance. And then account receivable has changed as well to 100. It's not 300 now. So for all the practical reasons, please keep in mind, I'm just trying to save my time by rewriting all these heads and writing on this alongside this question. So you have to make it a separate new account. You can't write it in the previous heads. So please keep this in mind. Okay, we have uh, account receivable 100. Inventory is unchanged. So the amount for this should be 39,800. It should be same, right? So this is 39,800. Leasehold improvements have not changed, so this amount should be unchanged. Then accounts payable amount did change. So the number of ads which have changed, ticking, for example, account payable has changed, and it has gone up, sorry, gone down by 2000. So it has come down to 47,000, if I'm not mistaken. Yeah, 47,000. Long-term liabilities have not changed, so we'll be writing it as 99,500. Common stock has not changed, it should be 10,000. Then dividends have changed, I believe. They have gone up by 500, and the new balance was 1,500. Dividends, where it is. Yeah, that's it. Okay. Revenues are unchanged, so we are writing it as 27,800. And then CGS hasn't changed, so this should be 10,200. Rent expense has changed, so new balance for rent expense is 400. So we'll be writing 400 here. And then we have supplies expense, it has changed as well. Balance for office supplies expense is 700. So it should be 700. Utilities expense has not changed, so it should be 200. Wages expense have not changed, it should be same 500. But interest expense has changed. It has a new balance of 1000. 1000. So have we accounted for all the heads? For example, all the changes. Now I'll be changing color to, okay, cash we have done, account receivable is done, account payable is done, dividends 1500 done, rent expense done, office supplies done, interest expense done, but we haven't done this interest payable. So this is a new head which needs to be added. So we'll be writing here interest expense, sorry, interest payable, since it's a new account. So interest payable is now 500 on the credit side. So now we are writing credit side here for this adjusted one. So I'll be raising this. Okay. So now can we have a new balance for all these amounts? We need to add these. Okay, this is 47, 57, 57, 57 and 7, 64, 84, 84, 184, 800. So this is your new balance, 184, 800. And this is the right side, 184, 800, credit side. And now we'll be checking this. So since there are too many numbers, so I might open calculator. Okay, 30400 plus 100 plus 39800 plus 100,000, 5 zeros, okay. Then 1500 plus 10200 plus 400 plus 700 plus 800. So the answer is 183,900. So this is coming as 183,900. Okay, let's do this on calculator as well. 47 plus 99,500 plus 10,000 plus 27,800 plus 500. So this is 184,800. That's correct. So we have a difference of almost exactly 900. So why is it? Have we miscalculated something? Let's see. Do 800 plus 300 to minus 2700. 30400. That's correct. Have we missed any head? Rent expense, office supplies. We've taken all these heads to the cash. So 1, 2, 3, 4, 5. Okay, fine. Rent payable is on the credit side. That's fine. So what has changed? Okay, my mistake. My mistake. I'll tell you what, this is 184,800. Same. I was counting this amount as 100, it is 1000. So that is why this 900 difference was coming up. So we have completed this cycle from unadjusted to adjusted trial balance. If you have any queries, please ask. Class, are you listening?
Yes, sir.
Yes, sir, we will listen.
Listening, but I'm asking if you have any queries, please ask. You don't have one. Okay, then. That's it for today. I'll be posting certain questions for you to practice and upload. You'll be having 1 week. So consider this as a small assignment as well. But obviously, it's for your own good that you'll be having certain practice questions. Uh, and obviously, while making it as an assignment, that's good thing that everybody has to do it for his or her own learning. So see you next week then. Allah Hafiz.
Allah Hafiz, sir.
So, Allah Hafiz, sir.